So my goal here is to teach you how your taxes should work and what your first paycheck will look like. People always talk about learning taxes in high school and financial literacy and how taxes work. So this is my attempt at hopefully showing you how, and hopefully it makes sense. So let's just say you accept a job that pays you 100 grand. Part of that paycheck that you're going to receive has federal tax withholding. So you're going to be paying taxes into it. This is all going to be dependent on how you fill out your W-4, whether you're single, whether you have kids, you're married, how much your spouse makes. Maybe you have other income coming in and you want to withhold more taxes. I just set this at 15% just as a formula. I live in Nevada, so I don't have state income taxes, so this doesn't apply to me, but I'm showing you California, Arizona. I set this at 2.5% for Arizona. California has like a progressive tax rate. Doesn't really matter for these taxes in the sense that if you overpay your taxes, you're going to get a refund back when you file your taxes. If you underpay, you're going to have to pay. So ideally, you just want both these numbers to be pretty close to what you owe in taxes within probably $1,000 ideally. So these are refundable or potentially refundable. Your Social Security and Medicare taxes is just a fixed amount. You're not going to get a refund for that. It funds Social Security and Medicare, which hopefully you'll get when you're at that age. Additional Medicare is if you make over a certain amount of money. It's over about 200 grand if you're single. And then these are optional. 401k, if you contribute to your 401k, you pay towards your health insurance. It just reduces your paycheck. 401k is still yours. Healthcare, obviously, it's an expense that you kind of pay for the benefit of the health insurance. I just show what the employer pays just so you can have an understanding. So even though your salary is 100 grand, the employer is going to pay a little bit more than that because they have to pay the other side of the Social Security and Medicare, as well as they have to pay federal unemployment, as well as state unemployment. So your $100,000 salary to them actually cost them almost $109,000. And these reductions just come straight out of your 100 grand. They don't have to pay any extra unless they match, of course. So this tab is supposed to just kind of help you understand how much you pay or how much you receive and how much your employer pays to kind of understand both sides of it. And then next is going to be your actual monthly paychecks. It's all going to be dependent on your pay periods. I think most people pay twice a month, the 15th and the 30th, or every 2 weeks. So if it's every 2 weeks, you get 26 payments throughout the year. If it is twice a month, then it's 24 pay periods throughout the year. And this shows for the whole year. But a lot of people will maybe start a job in the middle of the year. So maybe whatever that salary is, you'll only get half of it. So that's why I just put months. Maybe it's only 3 months that you get paid, or maybe it's 2.5 months. And so I'm going to assume you know how to do math and divide it by what you think is, or divide it by your pay period. So this one I just did it by months. It's 12 divided by 12 months. If it's going to be twice a month, then divide by 24, and then you have to, it's not going to be going by months, it's going to be by pay period. So do my months just to hopefully understand the concept of this. So I'm just going to go back to the full year. So if you, for some reason, start January 1st, you'll get paid 100 grand. You'll have $15,000 that you paid in federal withholdings. So essentially, this is a repeat of what you had right here. But that's just assuming you paid for the whole year. And in the red is kind of what you paid in taxes. This payroll tax is non-refundable. Federal and state taxes are potentially refundable depending on what you owe. And then this is going to be what's actually going to your account. I wrote net worth because if you also contribute to your 401k, it's still yours. So let me add, let's just say you put in a couple $100 a month for the whole year. It's minus 2,400. So your net paycheck will be less. Your net paycheck will be less, but you'll also have $2,500 in your, $2,400 in your 401k account. So in your bank account, personal bank account, this is what you'll have each month. And if you work the full year, that's how much you would get. So hopefully that helps you understand on a monthly basis what you should receive. And these numbers are going to go into your W-2 wages, which then in turn goes into the tax form. So this number is not 100 grand because we're subtracting the 401k, so you don't have to pay tax on that. So 401ks, unless it's a Roth, it's going to be reduced from your wages, so you don't have to pay taxes on that. And with typical traditional 401ks, you're going to be paying tax when you take out that money. So if that's a little confusing, we can just remove that. And your wage is going to be 100 grand. You withheld $15,000, $2,500 for state. And this assumes that you work the whole year, January 1st till December 31st. And so if you're single, so you can adjust this: single, married filing jointly, married filing separately, head of household. This is what your taxes should look like. This is for 2026. I know we're not done with it, but we're already in 2026. 100 grand, I'm going to assume that everybody gets a standard deduction. You either itemize, you take the higher of itemized deductions or standard deductions. Right now, for single, $16,100. If you add up all your state and real estate taxes and mortgage interest, charitable donations, if it's more than $16,100, then you're going to take that higher amount. So let's just say it's $20,000. So you'll take the $20,000 deduction instead of $16,100. But if it's first paycheck, my assumption is that you're not going to have much of that, and you're just going to take the standard deduction. So if that's the case, this is your taxable income, what the IRS uses to determine what taxes you'll have to pay. And I created this chart right here to kind of help you visualize how much tax you're getting paid, or these are the marginal tax rates. So each chunk of money gets taxed at different rates, and then there's like an average tax rate. So the more money you make, the higher the rate is for each chunk. But know that, even though you're in the 22% marginal tax rate, your average tax rate's a little under 16%. So that's your tax. And then $15,000 was withheld from your paycheck under this assumption, and you overpaid by $1,830, and so you should get that back. Now, if you live in Arizona, not only do you have to pay federal taxes, you also have to pay state taxes. And in this scenario, I was wrong. You would have to pay 2.5% on the taxable income, and we assume that you pay $2,500. You get a refund of $403. And there's some other things in here. Also, this is just hopefully just to help you understand the concept. There's a lot more other maybe deductions and credits that I'm not going to go over. This is just to help you understand the general concept of it. For California, itemized deductions we're assuming the same standard deduction, 100 grand. Tax on that is on this chart right here. It's also progressive. Marginal tax rates, it increases, and each chunk of money gets taxed at different rates. Your average tax rate for California, assuming 100 grand, is 5%. $5,000, you pay $2,500. You still owe a little over $2,500. So you're not gonna have to pay both these unless you work in both states. But I just want to show this because primarily I work with clients in Arizona, Nevada, and California. Now, if you made $50,000, obviously it's going to be less. And same concept, if you work the whole year, these are going to be different numbers. And now the tax on that is going to be a lot less. So you're only in the 10 and 12% tax bracket, average rate of 11%. Larger refund. Arizona looks like about same thing, same refund, just because we have the same fixed 15% withholding or 2.5% withholding. California, you at least get a refund this time because you're in lower tax brackets. And let's say you get a really high salary. And keep in mind, for Social Security, it's maxed out at $184,500. So anything above that, you don't have to pay Social Security. But for Medicare, you still have to pay the 1.5%. Well, 1.45%. Your monthly paycheck, tax rates, now you're in the 24% tax bracket. Now your average tax rate is closer to 20%. Arizona is the same. We had at 2.5%, so you get the same refund. California, we didn't withhold enough, so you'd have to owe about 10 grand. And so something maybe more realistic, let's just do 100 grand. And you started in the middle of the year, so I'm just going to remove all this. So your salary is 100 grand, but for the tax year, you only have to pay taxes for $50,000 because during the whole year, and this is also assuming you didn't work the first half of the year, like you just graduated and you just got a job that started in, we'll just call it July. So you work for 6 months. So your W-2 for 2026 is going to show 50,000, even though your salary is 50 grand. Essentially, everything's cut in half. And so taxes on that would be 50,000 standard deduction. Tax on that is 3,820. You withheld 7,500, assume that 15%, and you'll get a refund of 3,680. For Arizona, same refund of 403. California will get a refund of 210, even though your salary is 100 grand. And also, if you have kids, you can put dependents up here. Also, if you're married, but I think to teach this, I think most people are single when they start working, and this is what I expect. And then if you have taxable interest, you can include in here like, I don't know, $25. That'll adjust here. But the main goal of this is to show you what you'll receive and what the employer pays, what your monthly paychecks will look like, where it's getting paid to, what your W-2 will look like, what your tax will look like, the correlation between the marginal tax rates and the average tax rates, as well as the state tax rates. Arizona's fixed. California's also progressive, and it's you can see the different amounts. Also, like I said, I didn't go over every credit or every deduction, but ideally, hopefully, this is a good starting point for anyone wanting to learn taxes. I know everybody says they want to learn taxes, but not everybody does. So anyways, hope this helps. If you have any questions, let me know in the comments.